Next, we have an encumbrance. And again, when you're going through this example, I really suggest that you try each one by one, write it in, and then watch what I do, because it's the best way to learn how to do this. And then, of course, do lots of problems, because this is a whole new world. So we got to record encumbrance. Encumbrances are always the journal entry to initially record an encumbrance and to reverse an encumbrance is going to be always the same. Debit encumbrances, credit budgetary fund balance assigned for encumbrance. $210,000. And look at this, they canceled the purchase order. So if we're going to cancel a purchase order, we're going to debit budgetary fund balance assigned for encumbrances for $5,000 and take that back out. Credit encumbrances $5,000. And now we receive goods that were encumbered for $190,000. So again, I'm going to debit budgetary fund balance assigned for encumbrances because I've got to reverse that encumbrance for $190,000. And credit encumbrances for $190,000. And then I get to purchase the goods. So I'm going to debit, that's not a budgetary entry. I'm going to debit expenditures for the actual amount of the purchase. Notice that again, the encumbrance is not for the same amount as the expenditure. And I'm going to credit vouchers payable for $196,000. Now I receive the goods ordered in the prior year. So this was that $11,000 encumbrance that I recorded at the very beginning of the year. I put back on the books way back here. So now I'm actually going to receive the goods. So the first thing I'm going to do is I'm going to undo this encumbrance by debiting budgetary, capital letters of course, budgetary fund balance assigned for encumbrances. And I got to do the encumbered amount, that's $11,000, and credit encumbrances. It's fun. What you should do is use encumbered in sentences. Because it'll really, like, people like, wow, you know what encumbered means? Don't encumber me. Try it. Like, say, next time someone gives you a hard time, say, you're an encumbrance. Try it. Debit expenditures, credit vouchers payable. Don't encumber me. $9,000. Don't say that to your boss, though. Like, you can impress them with your vocabulary without asking them not to encumber you. So you have a payroll of $550,000. This is really nice. Debit expenditures. In fact, everything is just expenditures in governmental accounting almost. You know, it kind of feels like that. People write their exams like that, but of course, then they get everything wrong. Don't write that on an exam. Encumbrance, everything is expenditures. Yeah, it's not all expenditures or appropriations. They just write appropriations for everything. And then they're like, why'd I get a C? Vouchers approved for payment, $730. So debit vouchers payable, $730. $1,000 credit cash, $730,000. That's expenditures. Now let's talk about acquiring a capital asset. So they're going to order a fire truck. Estimated cost is $58,000. And so the journal entry is debit encumbrances, $50,000. Credit budgetary fund balance assigned for encumbrances, $50,000. And then they receive the fire truck. So first thing to do is undo the encumbrance. I don't know why I type so much when I could just do that. But it costs $58,000. So you reverse the encumbrance for the right amount, for the original amount, $50,000, and then you record the expenditure for the new amount, that's $58,000, and credit vouchers payable, $58,000. Then you pay the voucher for the fire truck, so you debit vouchers payable for $58,000. Credit cash for $58,000, and your fire truck has been paid for. Next, interfund activities. We have transfers out in the general fund to the internal service fund and the capital projects fund. We're only going to talk here about the general fund, and you can use your imagination to try to figure out what's going on in the internal service funds and in the capital projects fund. So in the general fund, I'm going to debit other financing uses. That's what OFU stands for, other financing uses. Debit transfer out to ISF. ISF is Internal Service Fund, $10,000. Credit due to ISF. This just creates a liability to the ISF. And I'm also going to debit OFU, other financing uses, transfer out to Capital Service Fund, CSF, $20,000. Credit due to CSF, Capital Projects Fund, and it's not CSF, it's Capital Projects Fund, CPF. There you go. Now I pay it. Debit due to ISF. It's like, this is really not hard. Credit cash. And then I'm like, students like, yeah, ask this on the test. And then you know what? They get it wrong. So know this, because it could be on the test. I don't know what it'll be on the test. But $20,000. There you go. Now, ISF incurred an expense on behalf of the general fund, so the general fund needs to pay back the ISF. So the general fund is going to go due to ISF for $1,000 and debit expenditure. And they're doing this as two steps. It's better to do it as two steps than as one because it creates kind of a trail of transactions. But you could potentially just debit expenditure and credit cash. To pay them off, they debit due to ISF $1,000, credit cash $1,000. Okay, now the general fund is going to give a $3,000 loan to the enterprise fund. So general fund will debit due from enterprise fund $3,000 and credit cash $3,000. Now, we had on the books, they're using the consumption method. And right now there's $14,000 worth of inventory on the books. We count up the inventory and it turns out there's $17,000 there. They use the consumption method. So what I need to do is I need to adjust inventory by $3,000 and put another $3,000 there. And I'm going to credit expenditures for $3,000 because it turns out they had less expenditures than they thought because they didn't use all these supplies. I've also got to adjust my fund balance unassigned. So I've got an additional $3,000 in supplies. So I have to assign fund balance for that. Credit fund balance assigned for inventories, $3,000, and debit fund balance unassigned, $3,000. And now I've got closing entries. First thing I'm going to do is I'm going to close all my P&L accounts, including other finances sources, other financing uses, and I'm going to close all my budgetary accounts too. So the budgetary accounts, remember, is kind of weird because the revenues, estimated revenues were debited and appropriations were credited. So now what I'm going to do is I'm going to debit my appropriations control. And really, I'm just going to reverse the entry that I did up above. In fact, I'll set this up so you can see it. There we go. That was the entry we originally recorded. So I'm going to now reverse it. It's not always going to be an exact reversal because it's possible that the company, the government might change their budget, in which case they would record additional budgetary entries during the year, and you would need to reverse those too. So I'll debit estimated OFU transfer out to CPF, Capital Project Fund, that was $20,000. I'll debit estimated OFU transfer out to ISF, also for $10,000. I'm going to debit budgetary fund balance unassigned, which was the plug there, of $20,000. I'm going to assign it. It's going to become fund balance unassigned, actually. I'm going to credit estimated revenues control for $875,000. And next thing I'm going to do is I'm going to reverse this budgetary fund balance assigned for encumbrances. Because I have all these different encumbrances around. So let's see what we have here. I'll first record the entry, budgetary fund balance assigned for encumbrances, and then I have a credit for encumbrances because I got to close all these out. There were a lot of entries for this, so let's go through them here. Initially I recorded this one as a debit to encumbrances. I'm going to do the account encumbrances here. Let's see, where were they? Oh, so we got this plus 210 minus 5,000 minus 190 minus 11 plus 50 minus 50. I think that's it. $15,000 credit encumbrances. That's the type of thing you would want to double check. Anyway, I'm eliminating that entirely, and now I'm going to put it into a fund balance. There you go, $15,000. That's good. I'm going to put it into a fund balance assigned for encumbrances. So I'm going to debit fund balance unassigned for $15,000, and I'm going to credit fund balance assigned $15,000. And now I'm going to do my closing entry. And when you're doing your closing entry, it's extremely important just to remember what closing entries are. I find a lot of students, when they get to advanced accounting, they just don't remember. So if you're going through this and you're saying, what's a closing entry? Then you really want to go back to your intermediate textbook and go over it. And what it is, again, in short, is that revenues and expenses, gains and losses, need to be closed in a regular company. In our case, we're going to close all the budgetary accounts to revenues, expenditures, other financing sources, and other financing uses. So what were all of these accounts? Let's go back through what happened. And we had revenues from property taxes, equal to $775 plus $6,000. We also had revenue from a grant equal to $55,000, which was a mistake. You didn't correct me. It should be 55,000 times 60%. Or 33,000. Now that's correct. Then you should have revenue sales tax. You're probably watching that and you're like, Holtzman, stop, fix it. The key is you got to just watch everything you're doing and try to, if you set up a way to catch your own mistakes. We got revenue miscellaneous, which I just did. It didn't go out like that to the client. $18,000. Expenditures, now expenditures is a big pain in the neck because they were all over the place, right? We have expenditures of, let's see, 196 plus 9,000 plus 550 plus, we have that fire truck, right? 58,000 plus 1,000. I think there's something else somewhere. I think that's it. $814,000, and that's missing something. That's missing the supplies. It's really nice if you have a real general ledger, right? And then you don't have to do this manually. Where's the supplies? There it is with adjusting entries of $3,000. So I got to take that off. It's 811,000 is expenditures. Then I have my other financing uses. Transfer out to CPF. Other financing sources and uses are also going to be reversed. And I've got other financing uses. Transfer out to ISF of 20,000. And the plug for all of this, if this was company, it would be retained earnings or income summary, and then it would go to retained earnings, and so would dividends. Fund balance unassigned. $23,000. And now we have a balance sheet. So if you do all the math, this is what's going to be left in your balance sheet. And again, we have the 90,000 receivables delinquent minus the $5,000 allowance. We have $17,000 left in supplies due from enterprise fund and so on. Notice the fund balance here. 17,000 is non-spendable. That's equal to your inventory of supplies. It should be. 15,000 is for the encumbrances, and then everything left, 120,000. That's the money you can spend. And here's a statement of revenues and expenditures and changes in fund balance. You'd have revenues minus expenditures equals the excess, plus or minus other financing uses and sources. In this case, it's only uses, so they're all negative. So you have a net change of 23,000, which is equal to what we put in over here. And that added to the beginning fund balance, which was on the beginning balance sheet, gives us a new fund balance of $152,000.